So in the interest of time, I'd like us to get this conversation started, and then Tobias will join us as we go along. So good evening again, and welcome to tonight's edition of Citizen Digital X Spaces. I am your host, Claire Munda, and today we are talking all about Kenya's manufacturing industry, and we'll also be talking about ways to bridge the gap when it comes to distribution for manufacturers. Now, we have a panel of different stakeholders, and I'll give them a chance to introduce themselves. But first, I will start with the housekeeping rules. First of all, this session is being recorded live, and parts of it will be used on Citizen Digital. If you have a question that you would like to ask, please feel free to put it at the bottom right of this space, and we will sample them as we go along. If you want to ask a question or make a comment live, we will give you a chance to do so at the tail end. So hold on to those. Now, without further ado, I would like to let our speakers for the evening introduce themselves briefly, and then we will get down to the state of manufacturing in Kenya and bridging that distribution gap. And I'll start with you, Kigen. Kindly introduce yourself, tell us what you do, and then we'll go to Winnie, and then we will proceed from there.
Thank you, Claire. It's a pleasure to be here. Thank you to you and to Citizen TV. My name is Kigen Kiplimo. I head policy research and advocacy at the Chamber of Commerce. Some of you might already know about the Chamber of Commerce. We are the longest serving independent voice of the private sector in Kenya. We are a business membership organization. We've got members more than 300,000. We're present in all the 47 counties, so we have that grassroots present across the country. Majority of our members are actually MSMEs, the small businesses. They form about 80% of our membership portfolio. And these members are in all the sectors: manufacturing, agriculture, retail and wholesale, and so on and so forth. We support our members to access opportunities, business deals within Kenya and outside. We also support them to address challenges that they have through advocacy measures. And lastly, we do offer the ordinary certificate of origin. So whenever someone wants to export something from the country and they need the document to authenticate that indeed these products are coming from Kenya, then we are the people who provide that. Thank you.
Thank you for that. Over to you, Winnie. Kindly introduce yourself briefly and tell us what you do briefly, then we can go on with the conversation.
Okay, thank you, Claire. Thank you, Kigen, for that good introduction. So my focus is on helping different organizations open up their route to market. So when I speak about route to market is if you're running a business, especially in manufacturing, how are you able to get your product to the right personnel so that your consumers can access this product? What is that channel that you're actually using to get your product or your service all the way down to your consumer or the person who uses your consumer? So working with different sectors in the market, from the manufacturing, go all the way to the insurance, to the banking and all that. Now, my big focus today will be in manufacturing because that's where the heart of Kenya and even feeding of Kenyans actually happen. So I'm glad to have this discussion today. Looking forward to how much we are going to share.
Thank you for that. Now, I'd like us to just give a brief background of the manufacturing sector as we get into this discussion, because that's the topic for tonight. Now, the manufacturing sector contributes about 7.6% to Kenya's GDP. The sector has remained resilient despite some challenges such as high operational costs and regulatory hurdles. The sector has been growing, but at a slower pace compared to other sectors, and it supports over 300,000 jobs directly, making it the second largest employment sector after the public sector. Now, last week, the Deputy President, Kithure Kindike, said that growing the manufacturing and industry sectors will accelerate Kenya's transformation into a first world country. Now, according to him, President William Ruto's administration has invested heavily in terms of resources and time in value chains that are critical to transforming the country from its current state. Now, tonight we want to discuss the state of the sector and how to improve efficiencies when it comes to the last mile delivery, as well as how AI is being incorporated in the sector and what impact it has on the industry. But before we get down to that, I would like us to just understand what the current state of the sector is. And I'll direct that question to you, Kigen. Kindly just give us an overview of the current state of Kenya's manufacturing industry and give us an overview of some of the key challenges that the industry is facing. Unmute your mic.
Thank you so much. Thank you. And thank you to Winnie as well. So, as you've rightly put it, manufacturing is a very important sector to Kenya. And as you've rightly mentioned, it's the second largest wage employer. That is why manufacturing has to be taken very seriously because of the impact that it has on jobs. At the Chamber of Commerce, we do a lot of research, and we've got an item called the Business Barometer. So what this does is that it measures the expectations of business people in the coming period. And since January started, we have spoken to close to 2,000 businesses across the country. In many sectors, asking them, how do they expect 2025 to be? And for manufacturers specifically, 50% of the manufacturers that we've engaged are actually not expecting their staff size to grow in 2025, meaning they're not looking to hire in 2025. About 62% of the manufacturers that we've spoken to are not expecting a drop in the cost of their primary inputs, that is the raw materials. So they expect that to go up, which would obviously affect the cost of production and ultimately the cost of the products in your shelves, in your kiosks or supermarket shelves. So you can see that there's a negative outlook on manufacturing, particularly in 2025, what manufacturers are expecting. I would like to extend an invitation to all the listeners and to Citizen TV. I will be launching this report on Tuesday next week, 4th. Be having a breakfast session in Serena Hotel. You will get to obviously see more insights on manufacturing and beyond. But that's just to give a peek into how manufacturing will be in 2025. When we speak about manufacturing, I'd like to look at it in 4 areas. There is the supply chain, there is the regulatory environment, there is competition, and then there is access to finance. If you look at the supply chain is simply, are you able to get your inputs, your raw materials in time and at the right price? This is very important for manufacturers because it dictates whether they're actually going to produce the products and are they going to produce them, will the products be affordable to customers? And if you look at the supply chain landscape, how it looks like, the local supply chain looks relatively stable, and we expect it to be stable in 2025. And I mean, this is largely agro inputs that feeds into the local supply chain for manufacturing. We expect good rains. It's currently raining, and we know that there's the variability of weather patterns because of climate change, but we expect that to be largely stable. On the global supply chain, this is where there is a concern. I mean, last year we still saw the effects of the Russia-Ukraine war, which was affecting, the delivery schedules for products, the prices of products. We also saw the conflict in the Red Sea, which obviously killed the activity at the Suez Canal, and this affected the inputs, the availability of inputs from Europe that come into Kenya that are used in production. It could be machinery, it could be, many products. So that created a concern where you find logistical cost increase, transport cost increases, insurance cost ultimately increases because of the risk pegged. But we've seen some, light at the end of the tunnel recently with the Israel-Hamas ceasefire. So we hope that would stabilize because it ultimately affects the availability of inputs, both in terms of time and pricing, which ends up affecting the cost of the final product in our shelves and in our kiosks. On the access to finance, this is a deep concern for manufacturers in Kenya, and why, just to give a bit of understanding, access to capital and loans is very important for manufacturers because manufacturing tends to be a capital heavy sector. And what do I mean by that? There's a lot of machinery that is involved. So you get a lot of, asset finance that is required to finance that. And here we're really talking about the true north that we should be having in this conversation is that to unlock manufacturing in Kenya, there should actually be a focus on light manufacturing. To set up a big industrial park, you probably need more than $1 million. How many Kenyans have $1 million to just put in capital? So for Kenya to unlock manufacturing, we're really focusing on light manufacturing here. You know, the small businesses. If you're able to move, if a welder is able to move into, you know, fabricating products and making them into final products, whether it's furniture or what, then that is indeed manufacturing, and that's the manufacturing that has to be grown. That's the local manufacturing that we're talking about. So the access to credit is a big concern, and we are seeing that it will be a big concern. The interest rates have obviously come down slightly, but still a lot of the banks are charging about 15%, 16%, 17%, which is, you know, still quite very high for manufacturers. And the bigger concern here is actually the crowding out of the private sector by the government of Kenya, because as the government borrows internally, then they are taking away the opportunity for manufacturers to access capital. If you look at the central bank data, in 2023, manufacturing received about 15% of all the total loans that were issued by banks in 2023. So, and currently, if you look at the budget policy statement that the government of Kenya issued a couple of weeks back, they are actually looking to borrow domestically about 584 billion. This is an increase of about 132 billion. So the government is going to borrow more in this coming financial year than it did from banks in Kenya. So that means that, you know, for every 100 shillings extra that the government borrows, it has denied 15 shillings. There's denied manufacturers 15 shillings extra that they would have accessed from the banks, which creates a challenge when a manufacturer has to grow or even sustain operations. Mm-hmm. Something important to note is that manufacturers, if they produce a product today, they have to give it to a distributor or a retailer that get paid maybe after 30 days or 90 days. So then they need working capital to operate during that time. That is why access to credit is a very important component to manufacturers. I know we'll continue to speak about the other factors, which is competition and regulatory affairs, but I hope that just gives an overview of how manufacturing is.
Thanks for that. That was an in-depth overview. And there are a number of points that you've put out there, and things like the supply chain, which I'll ask Winnie to contribute on. But I see Tobias has joined. I'll give him a chance to introduce himself. And then while you're at it, you can speak to this issue of the impact of the need for access to finance and that light manufacturing element. And then tell us a little bit about the impact of government policy or on such issues as tax and trade agreements. But first, introduce yourself, then tell us a little bit more about those two issues.
Thank you. Thank you very much, Claire. Tobias Zalando is my name. I'm the Chief Executive Officer for the Kenya Association of Manufacturers. Now, I'll start with the question about the manufacturing sector. In any economy in the world, the manufacturing sector plays a pivotal role towards the growth of that economy. If you look at the biggest economies that we have currently, China, India, and even US and Russia, there is a large factor of the contribution by the manufacturing sectors in those economies that has had tremendous and positive impact on how those economies have grown. Having said that, it demonstrates the need for any country to pay close attention to its manufacturing sector. Coming back to the scenario of Kenya, Kenya, the manufacturing sector has stagnated its contribution to the GDP at about 7.6 for the last many years. The last time we were in a double digit was about 2011, 2010. And therefore, there is need to have efforts put together both by the private sector and government to ensure that we increase our contribution to the GDP. We have, however, identified some of the key bottlenecks that we are engaging the government of Kenya to see how they can address. One is, of course, what we all know, issues around high tax burden. The tax burden in this country touches both on the manufacturing sector and our consumers, thus reducing what we call the buying power for the consumers to buy our goods. Issues around unpredictability of the policy and regulatory space. We have so many ministries, departments, and agencies that are introducing policies and regulations at the same time imposing taxes to businesses, and this impedes the growth of the manufacturing sector in our country. So we need to address some of those main issues. Now, coming back to the issue about financing. Manufacturing is a very intensive business. It requires a lot of capital, and getting that capital locally at the current interest rates may not be viable for some of the investments. And that's why majority of the manufacturers, particularly the high-end manufacturing, seek finances from international funders. Because the interest rates are low. But when it comes to our MSMEs, the small-scale manufacturers, we need to have a conversation with the banking sectors to give them low interest rates, because it's through the MSMEs, the small media enterprises, that we can have and grow the manufacturing sector. They can do a lot of subcontracting. So access to finance indeed is a priority, not only for the large and also for not only for the large, but also for the small manufacturing sector. So we need to have a clear conversation on how these organizations or small companies can be supported to access money to invest into manufacturing. Over to you, Claire.
Thank you for that. So access to finance is a very critical issue, and for the MSMEs, it becomes very tricky because they are unable to get decent loan terms, and so that's a conversation that needs to be had. But Kiplimo had spoken a little bit about the supply chain and the importance of getting the product to the customer at the right time and at the right price. And I want to rope you in, Winnie, on this. When it comes to distribution and getting those products to the customer at the right time and at the right price, what is the role of automation when it comes to this, and how can that be utilized in this within the Kenyan spectrum to ensure that manufacturers are getting those products to the customers at the right time, at the right price?
Okay.
So
Winnie can take it, and then Tobias, you can add on to that.
Okay.
correct.
So thank you, Claire. Thank you, Tobias, for that very, very detailed explanation on the policies and what is going on in the manufacturing sector. And when it comes to the distribution, this is where actually the manufacturer business is a make it or break it, because if then you don't have a very good distribution channel for your products, then they are going to remain in your warehouse. Now, in Kenya, our traditional market is very big. When I talk about traditional market, I'm speaking about our dukas and kiosks. Actually, this makes up to 60% of the market for our manufacturers. That's a very big percentage for the manufacturers to tap into. And of course, modern trade, which is now our first tier one, the supermarkets, the big supermarkets makes that 30%. So the challenge that most manufacturers are having, especially when you're talking about the small manufacturers, which now we are seeing more of made in Kenya, but for Kenyans brands coming up. The biggest challenge that these manufacturers are having is the very high cost of actually getting their product all the way down to us as consumers. The chain is very long, so means there are so many players that each of them has a cut around it. And at the end of the chain, you find a customer is getting punished by getting a very high pricing on the product that they would have bought with very minimal money. So what we are seeing, trends we are seeing most manufacturers are getting into is getting directly to the last mile. So they're trying to get access to that duka and kiosk without necessarily going through all this chain. That's why you're seeing most manufacturers are getting to B2B commerce. Most manufacturers are actually creating their own shops where the customer can straight up buy products from them, and they are able to deliver. This helps the manufacturer tap into the last mile, tap into the last customer, and as well reducing that cost of having a very long chain where there are so many players and so many carts within the chain. With that in mind, if we are able to reduce, or if the manufacturer is able to reduce this chain, then the point of pricing that my fellow panelists had mentioned, where a customer gets to have a product at a very high price, then is going to be something that we will not discuss, because then there'll be a lot of leeway for the manufacturer to have a very good pricing for this customer. And of course, with that, the manufacturer will be able to take care of logistics costs that are involved in transporting this product from them to the last mile. So some of the things we are looking at that is going to change or transform this landscape is digitizing that chain, just ensuring that there is clear structure that is created there. There's no fragmentation happening in that chain as as the state is currently. I don't know if that perspective, Claire, gets to answer.
Yes.
Yeah.
Yes. You have answered the question of just eliminating some of those bottlenecks that get to the last mile. And we'll talk a little bit more about that. But Tobias, I'd also like you to chime in on that conversation on automation. And then we'll also talk about AI. And I'll draw in Kiplimo to speak a little bit about that and its impact on the manufacturing industry and the light manufacturing industry, to be more specific. But Tobias, speak to us a little bit more about that. How automation and technology adoption has been helping, or its impact basically on the manufacturing sector.
We are focusing right now on what we call Industry 4.0, which encompasses the integration of IoT devices, automation, and digital transformation to enhance productivity and competitiveness. And if you look at most of the modern manufacturing plants, they have installed these technologies, ERPs that are end-to-end, from raw materials, production, to sales. And that shows you why right now, even looking at the models they are looking at towards selling their products, like the direct to consumer models, which is shifting a lot of sales approaches that are previously been used to more of a controlled, by the manufacturer in terms of the distribution of this product. And the reason why they do this is to have a direct relationship with their consumer. The other previous model is also working, where they're using local direct distribution centers, but the feeling of the majority that using such models, they have not had that direct relation with the consumer, and that's why most of them have shifted towards the direct to consumer models. And also because of the technology they are using that allows them to monitor from raw material manufacturing to point of sale conversation, enables them to now have access and interaction through technology directly to their consumer. And so manufacturing is changing, and through technology, a lot of things are changing. Even the issue around of Internet of Things, where they are producing products here based on customer specifications that has been done online, and then selling the same products online. So technology has really changed how manufacturing is done. Kenya may not have reached that level yet, but majority of the manufacturers that we are seeing are now imposing and applying digital and technology to support their production and even their sales. Over to you, Claire.
Thanks for that. So the Internet of Things and a lot of other innovations are being incorporated. And I'll come back to you, Winnie, to just talk about some of your experience with that when it comes to automation and digitization of the whole process. But I'd like to rope in Kigen to speak a little bit about the impact of AI. You know, AI is a conversation that is all over right now. And I don't know, maybe you can speak a little bit about that. Is it covered in the business barometer? How is it impacting the manufacturing industry specifically?
Thank you, Claire, and thank you to Tobias and Winnie for the great insights. Now, AI and technology, I'd like to look at it in two phases. One is that we are seeing a lot of traction from the big manufacturers, more established manufacturers, and even more established players outside manufacturing as a sector. And you know, Tobias has mentioned some of the items, for example, issues like point of sale that have become really automated. Excuse me. We're also seeing a good amount of traction in work streams like accounting. I think accounting is one of the areas that really progressed with the use of technology. The access to technological tools that support accounting and those kind of platforms, they've become more accessible cost-wise and general accessibility-wise. So we've seen good amount of traction there. Also AI, there's a good amount of application when it comes to marketing, even items like social media marketing, finding your target audience, who's really the best people or the best category of customer segmentation to advertise to, and so on and so forth, and obviously tracking customer engagement. The production process, we're also seeing AI automation on that. For example, if you want to produce a particular quantity of, let's say, soap, then the inputs and everything, that whole process is automated to tell you need 0 grams of this, 10 grams of that, 10 grams of that to be able to come up with a product. So we are seeing a good amount of application from our members on that. Also security. We're also seeing a good amount of application there, whether it's accessing areas, it's accessing documents. We're also seeing the application of AI on that front. But something that I must note is that for the Chamber of Commerce, as I said at the start of the call, our membership portfolio is 80% of it is actually MSMEs. And that is quite consistent with the demographic of Kenya's economy, where you find that majority of the businesses are small businesses. Now, the reality of these businesses is that they are actually still at the early, if not the mid stages of digitization. So AI, yes, it's there, it's happening, but with the big and established players. For the small players who are the majority, we are still at the baby steps of digitizing the business. For example, ensuring that we even have, digital accounting and marketing tools and digital record keeping, so that we are not dealing with physical receipts and physical records, that we actually have a digitalized system that supports that. That is where majority of the light and small manufacturers are, and there's a lot of work that is being done by development partners, private sector players and some government agencies to really improve that, because there's definitely benefits of incorporating technology into the processes. One of the low-hanging fruits is obviously marketing, and I mean we've seen digital marketing has really taken off; it's becoming a subsector of its own. So that must become a reality to us, that majority of the businesses are actually at the lower side, still taking the baby steps for digitization. The benefits of it is that it allows you as a manufacturer to produce in a cheaper way, in a faster way, and in a more efficient way, which goes ahead to giving you the competitive edge when it comes to the market. You mentioned about the business barometer, Claire, and one of the items that we mentioned that we've gotten from to hear from businesses is when we asked them, for those who are not looking to grow their staff size in 2025, they mentioned that one of the reasons is actually automation and technology replacing the human workforce in the working areas. But that was a small percentage, less than 10%, but still a factor that we consistently continue to watch for. Thank you.
Okay, thank you. So more of the established manufacturers who are adopting these automation and new innovations, but there's room for more to join in. Before we continue with this to another discussion, I'd like to rope in Winnie to just tell us a little bit more about this automation before we wrap up that conversation, because you have some experience, real life experience when it comes to the automation of the whole manufacturers and distribution chain. So maybe you can tell us what the experience has been like when it comes to the automation process, when it comes from manufacturers and distributors and other business players, and what that really has meant for players in the manufacturing industry.
Okay, thank you, Claire. There's something Keegan has mentioned, that most of the manufacturers are actually looking at reducing their staff, or rather not adding any staff to their portfolio, just having any manpower. And one of the things that we are seeing most of these players in the market are doing is they're trying to cut down on their costs of selling. And with that, the digitization is coming in handy, because some of the players, technology players, brands like Soko Jumla, actually creating solutions that are able to help this manufacturer tap into that last mile without necessarily having to cost on having a whole team that is on ground. So they have created solutions that are able to bring all the retailers together and give access to manufacturers for these retailers, ensure that there are freelancers who are working and in product and listing, who are working in bringing sales to these manufacturers. With that information that is coming in from the digital space or the digital platforms that manufacturers are now migrating to, this then means very good news for the manufacturers. There will be a lot of very good localized insights. So the manufacturer in real time is able to know specifically where does my product actually move, without necessarily having to spend on research or what is my exact target market. You know, sometimes as a manufacturer, you're just left guessing, okay, my target market is millennials, or my target market is Gen Zs. But now with this digitization means then you're getting real-time scientific data as a manufacturer to help you know, okay, this is my target market, and this is the feedback my target market is giving me. I need to produce or come up with a product that speaks to my target market. There is an aspect also that Keegan tackled for manufacturers, which is access to financing. Now, one of the most neglected sectors, especially in access to financing, is our MSMEs. Now, this traditional market. Nobody wants to touch a duka or a kiosk. And the reason for that is they're not able to track this kiosk. How much are you moving? What is your purchasing power? How much are you able to get in one purchase in your basket? How much amount are you spending? Now, with the digitization, then it's going to make it very easy for financing institutions to come on board and say, okay, we are able to see purchasing power of these shops. Now we can extend credit affordably to these shops, so that now when the shops are buying, they are going to increase their purchasing, their basket value. But at the same time, now in ripple effect, this is going to go back to the manufacturer to ensure that the manufacturer now then is getting actually money for operating costs. You know, now that is going to balance the whole chain if that is going to happen. So there is a lot that digitization is going to bring to our market if our manufacturers are able to embrace it and move forward with this perspective. Over to you, Claire.
Okay. Thank you for that. And we'll talk a little bit more about some of the trends that are happening in the route to market sector. But I'd like us to talk about this issue of operational costs, because it's coming up a lot in this conversation. And Kiplimo had talked about at the beginning of this discussion how much is really needed to set up a business within the manufacturing sector. Was it $1 million or more? And the focus being on light manufacturing, really. So, Tobias, maybe you could speak to us. What are some of the things that can be done to improve the trade environment when it comes down to cutting down on operational costs and making the environment a little bit more friendly for MSMEs to get into this sector?
So there are a couple of things that we need to do to attract MSME in the sector of manufacturing and even other bigger players to come into the space of the manufacturing. One, like I mentioned, the regulatory and policy environment needs to be stable. None of the investors would like to operate in an environment where the policy and the tax space is very unstable. We need predictability. Predictability helps with forward planning in terms of the operation of any industry. The other major issue that needs to be addressed basically is the cost of power, cost of energy. Kenya, if you look at it, yes, we have stable power, but it is much more expensive. In our analysis that we did some months back, the cost of power in Kenya is about 70% more expensive compared to our counterpart in the region. If you look at ESC, and even if you go farther to South Africa, that shows you that it will be expensive to produce in Kenya if you are competing with our counterparts in the region, because their cost of power might be slightly lower than ours. So we need to address this issue around energy and sustainable energy and also a reduced cost of energy. The other opportunity that can attract more investment is, of course, markets, availability of markets. So market access is a priority that we need to ensure or assure anyone producing here that they can access local, regional, and international markets. Without a market, no one can really produce. The fourth thing that we need to address is about illicit trade. Illicit trade sort of negates the growth of the manufacturing sector, negates any investment, because these goods may come into the market and not pay the required duties. And when they do that and compete with someone who pays duty and employs local citizen, then you cannot compete in such a market where illicit trade is thriving. So we need to address the issue of influx of illicit goods and customs goods that may find their way into this market, because they in one way or the other impede the growth and development of the manufacturing sector. The other issue is around labor and the right labor skill. Kenya is indeed blessed with the right labor skill, and we need to continue cultivating and training even our young people from TVET and from university with the latest industrial technology, so that we'll always continue to have a pool of resources in terms of labor to fit into various industries to support productivity and production. The last thing, of course, is around the political environment. In any country, without a stable political environment, then that will inhibit additional investments that will come, will inhibit expansion. You're seeing what is currently happening in DRC. It's affecting the citizens of DRC, but it's also affecting the citizens of Africa as a whole. So it's a conversation that we need to have to ensure that Africa is stable, because a stable Africa means a market that we can export our goods. Over to you, Claire.
Thank you for that. A number of good points that you've raised there, and I'd like Tobias, Tobias, but Kigen to speak a little bit on them. You talked about power, the cost of power being quite high, and the need for sustainable energy sources. And I'd like Kigen to speak a little bit about that and how MSMEs can really tap into that sustainable energy and how to do that within the long term. But you also talked about labor, and Kigen had talked about, 50% of businesses saying that they don't intend to hire in 2025. So how can we ensure that our labor is highly skilled, and how do we contribute to the employment scene when it comes to the manufacturing sector? Kigen.
Thank you, Claire. Indeed, very good points mentioned by Mr. Orlando. On the item on energy, what we are continuing to see amongst our members and the larger business community in Kenya is, one for sure, we've got probably one of the cleanest grid in the continent, if not in the globe. A good chunk of it a big chunk of it is geothermal power, which is clean energy. But the cost is where there is a concern. What we're observing in the market is that some businesses, particularly manufacturers, have decided to go the solar way. You walk in the premises of manufacturers and you see a lot of solar panels on their rooftops. However, the concern that we are seeing with solar, it being an alternative to the grid, is the cost of batteries. The panels are affordable, and currently there's a good amount of local production of the panels, but the batteries is where there's a huge expenditure on it. Then you get to a point where, in fact, it has become a business idea. A manufacturer tells you, if you are able to come and install the panels and have the batteries, and then charge me as the KPLC would charge me at the end of the month, as long as I'm getting it at a cheaper rate than what I'd pay on the grid. Then you get to own the panels and the batteries, that whole infrastructure. Then it's something that they'd be open to, because what they're looking for is an alternative that's cheaper to what they're getting from the grid, which is obviously very much more significantly expensive compared to our counterparts in the region, as rightly mentioned by Mr. Orlando. Another very good point that my colleague from the Association of Manufacturers mentioned is on the illicit products. There's a new way in which, not really new, but there's a way in which we need to look at it, the issue of illicit. One thing that's certain is that it is a factor of inefficient and really ineffective enforcement by government agencies. That is why you have illicit continuing to live in the market. That we continue to submit to the government that more enforcement is needed on that front, because manufacturers who are doing legitimate business, they're paying all these taxes, be it the corporate tax, the VAT, the excise, to the government. Then it only makes sense that the government invests this money to protect these particular industries that are paying the taxes. But then one thing that we need to look at is that the illicit market is also there to fill a gap in a way. Now, I know that's a big point. But what do I mean by that? The illicit market continues to grow, and there are markets that have been affected more than others. For example, the alcohol and beverage. If you go to if you go to a shop, the RRP for what they call the quarter, the 250 ml, for example, vodka. If you take the value brands, the Mwananchi brands as they call it, right now it goes for about maybe 260 to about 300 bob, depending on obviously the brand. The taxes on that is about 80 to 90 shillings, up to 100 shillings. And then there are some brands in the market, the illicit brands, that go for about 150 shillings for that quarter. Even if the manufacturer decides that I'm doing a charity case, I don't want to make money here, I don't put my margin. Also, the liquor store or whichever shop outlet, they say they don't want to make money. It still cannot fit 150 shillings for the 250 ml vodka if you're doing legitimate business. So then this is for economists, this is what we call the Laffer curve, a point where if you tax a product beyond a particular point, you create a black market. So then, and right now, the statistics are telling us that 59% of the alcohol and alcoholic beverage market in Kenya is illicit product. So the legitimate one is actually the smaller portion of 41%, and it is continuing to grow. So then we need to take a seat back and look at it, because for business people, if taxes get to a point where they become unsustainable for the operations of their business, what will they do? They will start finding alternatives. They'll start finding other routes, which now takes them to the black market. So then it's high time that for some of these sectors, we just take a step back and look at where are we and how do we kill the black market? How do we bring in the black market into the legitimate side of the business? Because it's there as a consequence of things falling through. One of the other items in closing is obviously the regulatory environment. Tax is still involved, and the predictability of our tax regime, which has caused a lot of concerns for investors, because no one is willing to put in money into an economy where they don't know what is going to happen next in as far as taxation is concerned. I have listened to the new chair of the Revenue Authority, the former governor of Laikipia, and the sentiments, he's made statements about not even possibly not having a finance bill 2025 this year, which is something that we'd really welcome as the Chamber of Commerce, because we don't need to actually have a finance bill every year. Business people need to take a breather. Because if you could see, if you could track and see the level of uncertainty that's normally there in the industry around April, May, people knowing the finance bill is coming, and maybe there's just one clause in there that might, knock me out of business. So we need that for predictability, but it does not seem the case, because if you look at the budget policy statement, as I mentioned earlier, the government of Kenya is looking to raise 343 billion more in revenue mobilization. This obviously more or less signals another finance bill this year. I don't think they are going to get this 300 billion from manufacturing. They'd have to look elsewhere, because manufacturers are feeling they are on the cliff, if not already beyond the cliff. The other item, just in closing on regulatory environment, is the levies. So we've got taxes, but then we've got levies, particularly in the counties. And you see a lot of multiplicity and duplicity of levies in the county, where, if you're transporting a product across different counties, you've got to pay in every county the same, if not multiple levies, which is causing a huge concern to distribution of products for manufacturers, which is obviously very essential to give them money. There's been some developments in this. In 2024, the County Licensing Uniform Procedures Act was passed, and we continue to see a good amount of traction there. In fact, the Chamber of Commerce, through our regional offices, we've recently just participated in a process with the Ministry of Trade of trying to now create structures to harmonize these taxes and levies across the counties through this act that was developed last year. Our proposal as the Chamber of Commerce, in the spirit of pragmatism, is that if we could go back and work with the economic blocks, which currently, governors are working with. For example, if you take the Lake Region Economic Block, if I am to get, for example, a distribution permit in Siaya County, then that should be recognized within the whole block, so that if I go to, Homa Bay, Kisumu, and all the counties in the block, Kakamega, then it's recognized, so I don't have to pay in all the other counties. And we think that will provide a good amount of relief for businesses. And for manufacturers specifically, we really hope that this is the year where we are able to really put an end to this pain of multiplicity and duplicity of levies in the counties. Thank you, Claire.
Thank you for that. A number of good points that you put there, and that Laffer curve, and just when things are overtaxed, then the illicit market, that's where some people go to. So those are conversations that need to be had. But I'd like us to move on to the issue of route to market and distribution. And I'd like to direct that question to you, Winnie. You had spoken a little bit about the importance of using, data to drive decisions for manufacturers when it comes to distribution routes and whatnot. Maybe you can speak to us a little bit more about what are some of the tools that manufacturers can use that can help them identify probably the regional trends and really target the right retailers when it gets to getting those products to the right place at the right time at the right price.
Okay, thank you, Claire, and thank you, Kigen, for that very deep conversation on the regulations around manufacturing. So some of the solutions I've been able to engage with actually that I'm seeing are helping manufacturers a lot. I could categorize that into two. We have manufacturers who are using B2B platforms. B2B platform means now the manufacturer is directly linking to their retailer down on ground to the last mile. You'd have products like earlier I mentioned a Soko Jumla platform that is able to just help this manufacturer just link up with the retailer down to the last mile. The other solutions, again, I'm seeing manufacturers are embracing more is having their own platform where a customer directly accesses them. So this is where you find a manufacturer is having an online shop. You as a consumer, you are able to make a purchase directly and you are able to get your product. Now, with these two specific models, they are very critical information that the manufacturer is able to get. If we get to the first model where it's a B2B, this comes with a lot of insights. Now, you, as a manufacturer, you're able to know my product is moving, let's say, to Rift Valley. Which part of Rift Valley is it moving to? Who are these specific people buying in Rift Valley? These retailers in Rift Valley, what is their purchasing power? Which product were we presuming is moving there and it's no longer moving there? Or what product are these people continuously asking for and it's never available? So it helps even the manufacturer in knowing stock out. It helps the manufacturer know this product, no, it's not a fit for this specific market. Let's move it somewhere else. Giving them insights on, we need to do very targeted marketing. So I'm not going to run a promotion or put up a billboard somewhere in Westlands where I know so well that in Westlands, this specific product doesn't move. Let me take it somewhere to Mombasa Road or let me take it somewhere to Thika Road, and that's where my product is moving. So it's going to be help the manufacturer to have very targeted marketing and also very targeted production, because sometimes you'll find a manufacturer has done an overproduction, which you find these products end up staying with them for so long, or they get to the market and they stay for so long without being sold, and there are a lot of expirations and returns. So again, on that perspective, with these specific tools that manufacturers are embracing now, it's a good thing they're doing that. So it's really helping them to be on point during production, to be on point in terms of research and development of new products that consumers can have, so that you're not just shooting and trying a product, you actually are producing a product that already has a demand in the market. That helps a lot on reducing the cost of doing something that is not going to work in the market. I could also add on digitizing that perspective, because then if you're able to access your retailers and your dukas and your customers directly, there is going to be loyalty, because you're getting feedback, you're creating a product from the feedback of the last people who are actually engaging with your product, and that in the long run is going to really drive a lot of profitability, because if there is loyalty, then there is assured market, then there is very good profitability coming on board to you as a manufacturer. Over to you, Claire.
Thanks for that. And as we start to wrap up, maybe you can speak a little bit, Winnie, still on the issue of how to ensure that the MSMEs, we've talked a lot about MSMEs tonight, how can they stay competitive in this market?
No, when it comes to the MSMEs, staying competitive means you need to get access to the market. You need to reduce your costs of running your business while focusing on leveraging on getting access to the market. So bringing in digital tools helps you do that. That's the first perspective. A second perspective is if we get then banks financing these MSMEs, then that means the MSME will not have a headache of restocking, because they know so well this bank has my back. So having financial institutions embracing the fact that MSMEs can actually be financed. We are having banks who are actually financing MSMEs and giving them an interest of as low as 0.5 or 0.6% per week. You see, that's a very good thing for MSMEs, because then you can be able to expand. You will have good operating monies to operate and increase your stock, or increase and expand your business. So digitizing is going to really open up markets, and MSMEs being open to now asking for financing, because again they shy off because for a long time banks have not been embracing them, but now we are seeing a lot of opening up to that perspective. I think over to you.
Thanks for that. Still goes down to that issue of access to finance, and Tobias had spoken about that, the need to really get the banking sector on board to understand the needs of MSMEs and really give them rates that are favorable to them. Now, as we conclude this discussion, I'd just like to go around the panel and get your final thoughts on how we can move the manufacturing sector forward. Tobias had spoken about that slump or that stagnation really in the manufacturing sector. So what are the steps forward? What needs to be done to get it moving again in an upward trajectory, get to double-digit growth and contribution to the GDP? And I'll start with you, Tobias.
Firstly, thanks to the contribution from Keegan and Winnie. Well, the manufacturing sector indeed is a priority. It's a priority sector that we need to boost. And I'll just mention one major opportunity, and if this is done and implemented, then definitely we are going to see a trajectory. It's around market access, and government has already signed a couple of agreements that will support export to various markets. One is the AFCFTA, which is targeting the African market. We have an opportunity to export our goods across Africa, giving us an opportunity to access about 3 trillion USD GDP, which is Africa, a population of over 1.5 billion people. I think this is a good opportunity. The other one is EU EPA, to export to the European Union market, giving us an access to a market of about 300 million people. And so this agreement, the other one, of course, is around AGOA, which we anticipate a renewal about it. Already these 3 key markets, including the local market and the regional market through EAC, if we can be able to produce and export to these markets, then definitely we are going to see a turnaround in terms of growth of the manufacturing sector and our contribution to the GDP. So the agreements that have already been signed, we just wish they can be actualized. And every young citizen in this country, particularly the youth, also need not to fear venturing into manufacturing, even if it is as an SME, because we do have an opportunity to grow the manufacturing sector. We do have an opportunity to access all these markets. So I'll end it by saying the manufacturing sector is the way to go, and each and everyone needs to put their effort towards starting a small manufacturing farm, because the markets are there for us to export. Over to you, Claire.
Thank you for that. So people need not fear getting into manufacturing, whether it's light manufacturing or otherwise. And there are opportunities in the Africa Continental Free Trade Area, the EU, and AGOA. All that needs is that implementation aspect of it. Thank you for that. Keegan, over to you. What would be your final word when it comes to the manufacturing sector and the perspectives going forward?
Thank you so much, Claire, and thank you to my fellow panelists and of course the listeners. For me, just three quick things. One, this year, what our manufacturers need is we need a lot of intentionality from the Kenyan government when it comes to the regulatory environment, be it taxation, be it licensing. We need deliberate, and intentional actions to grow the sector. The second item is we're expecting to see to see a good amount of traction in as far as sustainability is concerned for manufacturing in Kenya. The big manufacturers, you've seen the churning out sustainability reports, but we expect to see great traction from the smaller manufacturers this year. And it spans everything from your energy efficiency, your waste management, your water conservation, and we continue to see that, and as the Chamber of Commerce really encourage sustainability and applications as well as climate mitigation adaptation actions. The third thing is the Kenyan market. At the end of the day, it's about a market of what, maybe 60 million people. In the grand scheme of things, it's still a small market. So manufacturers have to spread. They have to spread their wings and go to outside markets. The European market is now much more accessible because of the partnership agreement. The UAE market, the partnership agreement was just signed the other day. The East African market continues to be a low-hanging fruit for small manufacturers. And as the Chamber of Commerce, we work with a network of 177 chambers of commerce across the world. We have supported our members to export to different countries, and we obviously invite the listeners on the call to become members of the chamber. We'll support you with the export processes, where to find a market. Even if you can't fill a whole container, we'll support you and connect you with partners who do cargo consolidation to be able to help you export. Lastly is just to mention the issue that's happening in DRC. We've spoken to the Chamber of Commerce there. The situation is not that well, but we are hoping for the best. We are calling for an expedition of the peace process, by the authorities in DRC and also the authorities within the East African region. A lot of Kenyan businesses have made, significant investments in eastern part of DRC and the larger part of DRC, and we would really love to see peace restored in the country so that business can be restored. Thank you and good evening.
Thank you for that. So a lot of low-hanging fruit within the East African market, and it's for people to take opportunities from that. And last but not least, Winnie, what would your final comments be?
Thank you, Claire. Thank you, Keegan, and thank you, Mr. Tobias, for this discussion. So, in Kenya, we are the second in Africa in retail penetration. South Africa tops with 60%. And we are second at 35, beating the Nigerian giant that has the largest GDP. So what I'm seeing happening in 2025 for manufacturers, if there is sustainability in production, so means if the government is able to offer incentives to the manufacturers actually using solar in their production, or even incentives in the fuel, just to ensure that the production level goes down. That's going to be a big thing for manufacturers for this year. Access to markets is going to be a very big thing. That's why we are trying to figure out how do we get a ready market so that when we are producing, we are good to go. So that is going to be a very big thing, just to ensure that our manufacturers are getting access to market here in Kenya and even outside Kenya, as Mr. Tobias had mentioned. Digitization is very crucial. I believe any organization that is not looking at digitizing, then there is going to be a challenge in maintaining their presence in the market, especially this year. So digitization is going to be a very big thing when it comes to moving forward as a manufacturer or even as a distribution chain player. We need to have a very clear distribution chain. We need to reduce that long chain that we have to ensure that there is maximum profitability for the manufacturers and the end customer is actually getting quality products at a good pricing. So I believe with the support of Tobias from CAM and of course Kigen from KNCCI, as the policymakers and the advocates for the chain that we are dealing with, the manufacturers and their distribution channel players, then we will achieve what we've discussed here today, and move the industry forward. It's a big industry, job opportunities within the industry. We can easily create many jobs for the young. Just tackle the manufacturing sector.
Thank you for that, Winnie. So the importance of digitization cannot be overstated. So thank you so much to all those who have tuned in. Thank you to our panelists, Tobias, Kigen, and Winnie, for your insights on the manufacturing sector, where we're at, and what needs to be done to take it to the next level. Thank you to our listeners. And in case you missed any part of this conversation, you can listen to it again on the Citizen TV Kenya page, as well as my page at Claire, DUDIEU. And we will have another interesting